Improving affordability continues to outpace buyer demand. Cole, how does that sound?
Sounds like it's a good time to buy if you're trying to get into the market. I mean, that's how I'm interpreting it. Affordability gets better and demand is lower. So if I'm somebody who's not trying to sell and I'm trying to buy, it's a good recipe if you ask me.
I agree. Very well said. Guys, welcome back to another episode of the Full Subjects podcast. July stats package just came out. So we're going to be breaking that up, breaking it down. As always, this podcast is for informational purposes only. It doesn't constitute any legal, investment, tax, financial, or any other advice. It's not intended to cause or induce breach of any existing agency agreement. Let's get into the key statistics from the stats package, and we can also talk a bit about what we're seeing in the market. Actually, let's switch it up. Let's not just jump right in the stats, but let's just talk about the things that are coming across our desk right now, and some of those files, if you want to call it that, and what you're seeing in the marketplace right now.
Yeah, for sure. I think you're seeing patience. I think you're seeing some optimism for sure when it comes to first-time home buyers, but you're seeing more patience, more questions, and just taking time to understand the situation rather than, hey, my friend bought a place. All of a sudden, I need to buy a place.
Mm-hmm.
Two obviously big extremes, but at the end of the day, you're seeing more of that, which is good, to be honest. It means that people are taking the right steps. It doesn't mean that everybody's going to be ready to buy right now. There's still going to be a lot of people that are a little bit more cautious. I'm finding that it's more people that are in a good position financially. They've got some savings, they've got some fallback, they're in a steady job. It feels comfortable for them. They've rented for long enough now and they're like, you know what, it's time. That's one example, but they've rented for long enough now and now it's time to look at what it would be like to buy. And then on your side of things, they can take some time to work with somebody and buy. So yeah, that's what I'm seeing, at least from a purchasing standpoint. Everything else beyond that in my world is kind of status quo in the sense that people are going to continue to have mortgage renewals. People are going to continue to refinance when the option is there, when it makes sense to do so. Yeah, I would say overall, though, it's the buyers that they're being patient right now.
Yeah, very, very well said. I'm seeing something similar. I do also want to, I know we don't, I guess we kind of do the Coles notes sometimes with some of these stats
Oh
packages,
yeah, we didn't do that today, but
but didn't end up doing that today. So I'm going to ask about it. But obviously there was a Bank of Canada announcement fairly recently, a couple weeks back. Don't know how much we talked about that really on here. What are you seeing with rates? You know, there's indicators that suggest that maybe they should be dropping rates. There's other indicators that say that
yeah.
maybe they should be increasing rates. Everything on the other side of the world is a bit of a mess again with oil and all that stuff. So what are you seeing in general? What are you seeing with rates and just anything to add to that?
Yeah, so rates have been very steady. Like obviously, Austin mentioned the Bank of Canada, and the Bank of Canada hasn't made a change now for 6 straight announcements, which is well over half a year now. And beyond that, fixed rates have been very steady too. Like it's been one of the steadiest years for interest rates that you could ever ask for. And as far as I'm concerned, that's a good thing because
Mm-hmm.
you don't have to worry about the change. Now, quick little, I don't know, sidebar here. Always good to get pre-approved. Always good to get a rate hold because you never know when things can change. But the important part is things are fairly steady. Austin's absolutely right. We do still have that push and pull or tugging in two different directions because of the fact that there's arguments for, hey, we should be cutting rates because of X, Y, and Z, or we should be increasing rates because of X, Y, and Z. Unlikely that anything's going to happen right now. There needs to be enough momentum one way or the other, excuse me, before we're going to see a shift. But right now, the signs are pointing to more of just wait it out and see. I think the Bank of Canada's being cautious. They don't want to react too soon and then have to take their foot off the gas or backpedal or whatever you might want to call it. Recently, the US Fed held their rate again. We don't talk about that a lot, but it's always important what happens down south in the US because it tends to trickle into us up here in the north. So some people are speculating that that could lead to changes in fixed rates. We have seen bond yields shift slightly since the recent hold by the US Fed, but nothing significant. Like we haven't, like I personally haven't seen any fixed rate changes. Like I get rate updates every day from certain lenders. Other lenders don't send them out every day. And a lot of the times it's just copy and paste from the day before. But I say that because I haven't really seen any changes. Everything's been pretty much the same within a few basis points or a few what I mean by that is like a few not few percentage points, but a few hundreds of percentage points. So very, very minimal changes. And yeah, there's still a lot of opportunity out there in terms of looking at different lending options when it comes to renewing or buying. So yeah.
Very well, very well said. Let's hop into some of the key statistics now. So overall, benchmark prices were down 0.8% from June. So prices are down about 7% year over year. 1,089 sales in the Fraser Valley. So that's down about 5% month over month, down about 9% year over year. So yeah, sales are definitely a bit slower this year. Does it surprise me that things are slower in July than they were previously? Not really, to be honest. Like as we get further into summer, that doesn't necessarily surprise me that things slow down a little bit. So I think that's pretty par for the course. It is interesting to see that they're down about 9% year over year. I think that's something interesting to watch. Obviously, there's sales. We also got to talk about inventory and active listings. So over 10,000 active listings in the Fraser Valley. So that's a higher number than we've seen. So it's still about 32% above the 10-year seasonal average. New listings were at about 2,800, and that's down about 14% from June. So like I mentioned at the beginning, quieter month in July. Doesn't really surprise me that there's less new listings hitting the market, but with sales being down, still new listings kind of trickling on. Doesn't surprise me that we still see like a bit of an uptick in active listings there. Average days on market is very interesting. 40 days for detached and townhomes was the average days on market. Condos were up to 46 days. What are your thoughts on that?
On that. So we've talked about average and median before, and I'm going to throw it on the spot here, Austin. Maybe you can pull up median while I kind of ride the puck here. So what I think about that is it still kind of shows the weakness of condos and the high inventory of condos. So they're going to take longer to sell. There's more options. There's just more. It's just harder to kind of eat away at those numbers. So it's going to take longer on average for those condos to sell. Detached and townhomes are always going to be that sweet spot product. We talk about that a lot. I'm a little bit surprised that it's the same as detached in the sense that we tend to see townhomes be the lowest, then detached, then condos. But I mean, we're still talking about 6 weeks here. Like 40 days is almost 6 full weeks, 46 days being closer to 7 weeks. It's a long time. It's a long time. I mean, I think it's the reality we're in. I think we've been in that reality for a while. We've kind of jumped around in the 30s, low 40s for a little while now when it comes to average days. But ultimately, it just shows me that you got to be patient as a seller. And again, when it comes back to what I said before, you can be patient as a buyer as well, which is a great opportunity. So I think Austin's got the numbers here for us. Let's go into median.
Yeah, so on detached houses, we're at 28 days, which is about 12 days less than average. So that's pretty significant. That's
That is
like
significant.
two weeks faster. And again, if we're picking median being the middle number,
Yeah.
that means that I think if that's dragging lower, that does mean that some stuff is selling quicker.
Yeah.
For sure. On apartments, we're at 31 days, which is up from about 29 the last couple of months. And I'll reference detached has been climbing. So in May, it was 22 days on market median. June, it was 25. July, up to 28. And then townhomes, median, we've been kind of hovering around the 18 to 20 mark for most of this year. So January, I'll go back a little bit farther, was 40 days median, which is interesting. Then it dropped down to 18 in February. And then from there, it was 22 in March, 22 in April, 24 in May, down to 21 in June, and then back up to 25 in July. So still kind of hovering around that 3-ish week mark, plus or minus a couple days for most of the year, other than January. And again, that doesn't really surprise me. There are definitely some pockets that are for townhouses, especially that are moving quite well right now. So yeah, always interesting to see that the median is different than the average by about 2 weeks. So that's pretty interesting stuff. Headline says that affordability is improving. I think the more interesting question is, if affordability keeps improving, why aren't we seeing sales increasing? In my opinion, I think that's a couple different things. I still think that there's some buyer uncertainty and sentiment as well.
100%.
like you've talked about earlier with the ability for people to be patient. Like I'm definitely seeing more first time home buyers than earlier in the year getting into the market. I have a couple of them that are looking for places right now. And the conversations are, yeah, like, we're going to set up a search, but we're going to be patient. If it doesn't check, 8 or 9 out of 10 of those boxes of the criteria that we're looking for, then we're going to be patient and keep looking. So I think that's good. I don't think there's a lot of rush, but I also think it's important to manage, like, if you can find something that's a 7 or 8 out of 10 and it's got things that you can do to make it a 10 out of 10, maybe that's some updates, maybe that's some paint, maybe that's, whatever. I think it's you got to be mindful and also take the kind of 30,000 foot view of the place. Does that make sense?
Yeah, for sure. Exactly. You got to look at the bigger picture and see where the opportunities are. That's how I interpret it if I was that buyer. It's like, hey, look, I can get this place for this price. I have this extra that I can then put into the place and get it to where I want to be. And the nice thing about that, which I think people underestimate a lot of the times, is you get to decide what those changes are. If you
Yeah.
buy a brand new place, brand new's great, don't get me wrong, but you don't have as much control over what that place is, or maybe not even brand new, but newly renovated. Maybe you wouldn't have chose that color of cabinets. Maybe you wouldn't have chose that countertop. Those are obviously bigger renovations, but maybe you wouldn't have chose that wall color, and you're still going to end up having to paint it anyway because you don't like that color. So I think Austin makes a good point when he says that you can get a really good place, make it a great place,
Mm.
and you get to make the choices on what that's going to look like.
Yeah, for sure. And I think, I mean, it's always fascinating to me too, some of the discussion with some people, or even my clients as well. Like I remember I have one listing, and I was chatting with the other agent, following up for feedback, seeing if we could generate an offer, kind of doing my job. And I remember having a conversation with the agent, and this property in particular, it's well kept, in a good location. It's got some updates. Appliances aren't brand new, and there's a key there to that. But everything's working fine. No,
Yeah.
no issues. Some of the appliances in the home have been upgraded. Some of them are still original, but it's not like they're faulty or anything like that. And when I was chatting with the agent for feedback, one of the response was, "Well, the clients, they're worried about the appliances not being brand new." And I was like, "Really? Like that's something that can be fixed with." Fix with money, and for the right price you can factor in buying new appliances. So yeah, it's just interesting, the decision making, if that is the right way to put it. And I'm not talking negatively about this person. Obviously they get to buy whatever they want with their money. That's why it's their money. So but it's just interesting to compare that to what we saw. I mean, the last couple of years was, yeah, if there was one or two things found in inspection, yeah, we can change that, whatever. But even 4 or 5 years ago, it's like, oh, place needs a roof, that's fine, yeah, we'll deal with that. Or new hot water tank, yeah, we'll get that done when we move in. It's just seeing the pendulum swing so far the other way is just really really interesting to me. So
Yeah.
so yeah.
It really is. And I think we've gotten to the market now where the people that wanted to buy this is the market they wanted, right? They're like, I
Hmm.
want all of the things I can get now. I don't have to bid. I
Hmm.
don't have to rush. I actually have choices. I think all those things are there, but we still don't see demand. And I think it's kind of one of those cliches of the grass isn't always greener on the other side, because sometimes in order to get all of those things, other things have to give, right? So
Hmm.
as the economy is not in the best position it's been in before, and for a lot of people that's nerve wracking because job security is obviously a huge concern when it comes to paying your mortgage every month or paying your living costs. So I think that plays a major factor in this. But yeah, it's interesting how much, as we do this, and we've done the podcast now for a while, and we've been able to go through different markets as we do it, is to see how much psychology or sentiment plays into decision making. And it's not just as simple as, well, all the things that I wish I could have had when I bought are now here and I'm still not buying. Why is that? Like, what's stopping me from getting over that point? Assuming that they have the down payment and they have the means to do that. It's just very interesting to me to see how much of a factor sentiment and in some ways crowd mentality plays into other
Totally.
people's decisions, right?
Totally. Yeah, very very well said. Anything to add to that, or should we pivot into kind of our next section here?
No, let's keep going. I was kind of moving ahead anyway, but yeah, it's very interesting. So what are your thoughts? Like, do you think what's it going to take?
Yeah, it's a
What's
great
the crystal
question.
ball say?
Yeah, I mean, I don't know. There's a lot of uncertainty, and typically when like you talked about crowd mentality, a lot of times when there's uncertainty, people choose to not make decisions. I think when I'm looking at 10,000 listings on the like another thing to think about too is when I'm seeing 10,000 or over 10,000 listings, those are in theory. I mean, obviously there's going to be vacant places or tenanted places or, you know, lots of like it's not all owner occupied units obviously, but those are people that even if we go reserved, let's say it's 50% of those are owner occupied. And I think that's probably on the low side. I would love to have that stat. I don't know if we can pull that from our system, but hypothetically, you know, if 5,000 of those 10,000 listings are owner occupied, you know, in theory, those people want to move probably to somewhere else.
Yeah.
There are people that want to move in this market. There's people that need to move in this market, but you know, for one reason or another, they're not able to. And obviously, there's a ton of different factors around that. Maybe they're in a position where they're priced too high because that's what they need to sell at to facilitate a move. Maybe for some of those, they just, you know, maybe they're just priced too high because, and that's not what their market value is, and that's why they're not able to generate a sale. So there's lots of different factors, obviously, in that. But you know, in theory, listings mean people want to move, people want to kind of navigate the market. So yeah, just something to chew on there.
Yeah, 100%. I'm going to jump ahead a little bit further here. Let's get into pricing a little bit more, and then we can kind of circle back on some other things. So Austin at the top gave a high level stat that prices were down 0.8%. So we like to get into each of the asset classes and talk about that a little bit more. So detached was down 1.1% total month over month, and that's 8% year over year. Townhomes were down less than 1%, 0.9%, down about 7% year over year. And then condos were down the most, 1.4% month over month, and down about 7.5% year over year. We always talk about how the fact that townhomes tend to be the sweet spot because you've got people moving up, you've got people moving down. They can often offer first time home buyers with a family as a first home. They're a good asset class. So is it fair to say that townhomes still offer the best quote unquote value today in terms of getting into the market or just in terms of being the best asset class, or what are your thoughts on that, and like what insight can you give?
Yeah, I think for a lot of people, you know, if possible, assuming they can afford it, I think it's just like I don't want to say a friendlier product because a lot of that's also going to depend on where you're located and what your living style is. Like out in the valley, specifically, we see again not talking bad about condos because there's some good ones, but it's a comfortable lifestyle. You've got a garage, you've got storage. If you like to do
Yeah.
activities or you got kids, a lot of them you're going to get a yard. You know, you're kind of avoiding the stacked living of, you know, your neighbor upstairs makes noise, things like that. For some people, it's a square footage requirement as well. Like if you the ratio of two bedroom or sorry let's say 3 and 4 bedroom townhomes versus condos, like there's way more townhomes that are available. They don't really as much, again there's some available, but it's very rare to find 3 and 4 bedroom condos specifically in comparison to other stuff. So some of that
Yeah.
comes down to, you know, requirements of what you need for your household, all that kind of stuff. And I think if possible, a lot of people like first time home buyers that I'm seeing right now are trying to skip that step if possible, but a lot of that again is going to come down to like income and you know, down payment amount and all that other stuff to get to that price point.
Yeah. No, I totally agree. I think it's going to continue to be a strong product. It's interesting, and I'm not going to bash any particular area here, but we were out in Tawasin this past weekend, and they're a community where it's a lot of detached home. There's not a lot of strata units in general. Like there's very few. We were in one area where there was some strata units, and there's
most of
certain home.
it's most of it's
Pardon?
leasehold, most of it's leasehold in that area too, right?
Sorry, one more time.
One a lot of it is leasehold in that area as well as opposed to freehold.
Yeah, in that area. Yeah, sorry. So yes, leasehold is more over by the mall area, so
Yeah.
closer to the ferry.
Oh, you're sorry,
Within
you're
like
talking about
yeah,
like
like within like Tawasin, like the town of Tawasin,
yeah,
which obviously it's all Tawasin, but like in the
more residential spot
the
like
older
further
parts of
in or
Tawasin, like the more established communities, I guess.
yeah.
there's not a lot of stratified units in that area, and there's a lot of people that are very against it for whatever reason because they want to keep Tsawwassen as the way that it is. But it's interesting because of what we're talking about. Like townhomes continue to be a good entry level product, and they continue to be a median product as well in terms of moving up and down. So I don't. To me, it doesn't necessarily make sense to not allow those products. Like I think that's kind of silly, but I don't see them as a problematic product. Like I can understand why you don't want a giant tower in your backyard. Like that, there's an argument to be made about that. Whether or not that's the right economic decision, that's not for me to decide. But it makes a little less sense to me that you wouldn't want, hey, we can fit an extra 10 homes here versus 2 or 3. Is that the worst thing? I don't know. I'm going a little bit off tangent here on based on our topic today, but it's just interesting because it's on my mind because I was thinking
Mm-hmm.
about it. You're out there, so
Yeah, a lot of that comes down to like density and everything too, and building and cost and all that stuff. But
yeah,
yeah,
transportation factors into it, right? Like there's always those considerations, but yeah, it's interesting that there is pushback on that. So anything you want to touch on from a seller perspective right now?
yeah. Well, it's interesting. Like I always try and put context to the stats that we're talking about. So so let's look at townhomes here. So your benchmark price is 757,300, and roughly month over month last year, or sorry, within the last month, townhomes are down 0.9%. So let's just, for quick math of rounding, let's just say that's 1%. And I'm going to do some quick math here. So if townhomes are down month over month, some context to this is, assuming it was 1%, and I know I'm fudging the numbers a little bit here, you divide that by 30 days, and you're looking at about $250 a day. Okay. So some context to this when we're talking about median days on market or average days on market. The longer you stay on the market, you are costing yourself $252.43 a day based off of this quick math. So picture this. You want to sell, you want to move, you're trying to figure out what price to list your place at. Every morning you wake up, you walk into the kitchen, you make yourself a coffee or a tea, or you have breakfast, and your house is worth $250 less. So with that being said, the context of, we always talk about pricing properly and being at market value and presenting yourself in a way that you're going to be successful in a sale. The longer you stay on the markets, the less chance you are of getting that price. So it's just really important that the more, like I just talked about, the more you stay on market, every morning you wake up, it's $250 less, $250 less, $250 less. And that's just context to put some of these numbers into. Does that make sense?
It does, yeah. It's depressing, I'll be honest, when you say it that way, but it does. It does make sense. At the end of the day, you can linearize, excuse me, the decrease when we look at it because things have been trending downwards, and we can look at it as a daily basis. We really want to get into the depth of this. It's basically $10 an hour. Like it gets really depressing, often the more we look at it. So
I have not used that yet, but that's going to be my next deployment. I'm going to be like,
yeah, so
every hour you're still in your home, it's $10.
yeah, so this appointment by the end of it, $10 less.
Yeah, boom. Yeah, done.
And we're not trying to make fun of that because us and I
No.
both own homes ourselves, and it's not a funny thing, to be honest. Nobody wants to wake up in a home that's worth less the next day. But the reality is, it matters when it comes to selling because you have to, I don't know if get ahead of it is the right thing, Austin, but you have to price accordingly based on the
Mhm.
expectation that, hey, this isn't going to sell tomorrow and prices are trending down at this time. Please add on to that.
Well, yeah, I think more than anything, we're just trying to like add perspective to the words that we're saying, because it's very easy for us to come on once a month and be like, yeah, prices are down 1% per month or 8% year over year or whatever. But
What does
when
that
you
mean?
think when you think of it being $250 a day based off of your list price, it's like, oh, okay, well, that's some context that I didn't think of, and it's just a way to look at it. So yeah, it's providing context and stories to help articulate a point, visuals, if you will. So we've talked about prices. Let's switch back to mortgages and just talk about perspective. So, monthly payment differences compared to 2024. Are you seeing people fixed versus variable today? Qualification changes, renewing mortgage. Like, we'll give you the floor again to just talk about things that you're seeing in the mortgage world
Yeah.
in that context.
So when it comes to payment differences, so we did a comparison. We didn't compare 2024, we compared 2022 when prices were at the highest. And we looked at, okay, what are payments going to be relatively, even though interest rates are higher? And they were better, if not the same, across the board, which is just to basically say, like, you can get in at a lower price point. Yes, rates are higher, but the reality is you get in at that better point. Your payment's going to be the same, if not better. And in the long run, assuming the value of the home appreciates, which if you wait long enough, it will, you're going to be better off. That was the argument. And that argument still holds true in many cases to even 2024, because prices have come down since 2024, rates being probably a little bit better, if not similar to what they were in 2024. So again, if we compare rates being higher or even the same as they are today and prices being lower, you're absolutely going to be coming out ahead when it comes to your payment or just having to put less of a down payment. So all those factors are to your advantage right now. Fixed versus variable, that's always going to be a interesting situation. It's a boring answer, but it depends on everybody's specific situation. Variable continues to lead fixed right now in terms of you're going to get better rates for a variable rate mortgage than you are for a fixed rate mortgage. That's the reality of it. We've said this very, 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 very many times. I say that because it's one of the most talked about things is variable rates outperform fixed rates in the long run. They do. They always have. And there's been a short period of time where they didn't, but long enough time horizon, they always have. So that argument holds true. Will it hold true for the next 5 years? I don't know yet. We'll wait and see. But variable rates are lower, and history shows that you are going to do better on variable rates if you stick with them. What's interesting is you can talk to somebody like me, a lot of other brokers will have access to things like this, where you can simulate scenarios. So you can go, okay, what if I chose a variable rate now for the next 3 or 5 years, and then I chose a fixed? What does that look like? Or maybe I want to do a fixed then a variable. You can play around with different situations, or I want to break my mortgage after 3 years and then switch. So you can play around with all these different situations, and then you can rank them and go, okay, based on my assumptions, this is the best option for me. Obviously, you're going to make assumptions because we don't know what rates are going to do in a few years from now, but you can still simulate what might happen. So that's something that can be valuable. Pretty confident your bank's not going to do that for you. So that's definitely a little bit of a shameless plug there. But the reality is the information's there if you go looking for it. Renewing mortgages, you're still going to see a lot of people just continue to renew with their current lender because maybe they don't know what their options are. Maybe that's the best option for them. Like I have people that I'm like, look, that's what you should do. That's your best option. You should ask the questions. Here's some questions you should ask. I have a client that I was working with recently. I said, look, you should stick with your lender. Here's the things you should try to get out of it, and just kind of help them have that conversation just to make sure they're getting the best option. But the reality is sometimes that is the best option. So always good to find out first before you renew, though. That's my opinion. Yeah, that's pretty much it. Also on the rate side, I think you're just going to continue to see people make the choices that work best for them. And I'm going to continue to give the advice that, again, it always depends on your situation. What's the best solution for you?
Very well said. Anything else you want to touch on? We're running about 30 minutes, which is typically.
Yeah, let's wrap it up with one quick thing. So what's going to happen next? So I've got a couple scenarios. Actually, I've got 3 scenarios here. So scenario number 1, confidence improves. So we talked about this a lot, that confidence is very important when it comes to people making decisions. All the other factors may be in a positive state or in a positive position, but if confidence isn't there, it's not going to lead to people making the choice to buy. So scenario number 1, confidence improves, sales will recover ultimately as a result of that, and then prices will stabilize and then eventually start increasing again as we start to see a little bit more demand come back into the market. That's scenario 1. Scenario 2, rates remain pretty stable, but uncertainty continues. So that's kind of where we're at right now. Inventory stays elevated. Again, that's where we are now. And then prices continue to drift lower. So if things stay the way they are, it's possible or unlikely that rates will continue to drift, prices will continue to drift lower. So that's number 2. That's where we're projected, or that's where it looks like we're going. And then scenario number 3, which is not a good one. Unexpected economic event changes everything, or maybe it's not an economic event. Maybe it's another pandemic. Yeah, exactly. That would be obviously pretty detrimental. That could be significant in terms of where prices go and where sentiment goes, especially. So I'm not definitely not voting for number 3 here. I'm actually hoping we kind of see 2 play out a little bit longer, because I think it's going to take some time, and then we start to see scenario 1 play out where things slowly recover. I'm going to ask you this question to wrap it up here, but I'm going to give you my opinion first. I think that over the next 5 years, maybe even longer, we're going to see things stabilize and we're going to see prices remain fairly consistent. Will they come up a little bit? I think they might, but I think that you're going to see we're going to get to a point where things remain pretty status quo for a while, which isn't a bad thing in my opinion. But Austin, what do you think?
Yeah, I mean, do I think 5 years from now the market has turned around and things are doing better? God, I hope so. But
Me too.
all jokes aside, I think if prices do continue to fall, hypothetically, it would probably, you'd think, get to a point where people like investors or people like builders or people with money, they say, hey, if at that price, I'll do it, right? Whether that's like we've seen, obviously, a bunch of people get out of the residential landlord game, if we can call it that. People that have like an investment condo that they rent out, trying to cash flow a little bit, and obviously there's been some changes that make that a bit more difficult. One being prices, two being rent coming down. Like it's more challenging to be a landlord and cash flow positively more recently than it has been in the past, depending on when you got that property. But hypothetically, if in my opinion, if prices dropped low enough where people could cash flow, you'd think that people would get back into it. No? Do you disagree?
I mean, at the end of the day, the numbers got to make sense, right? And I think your
Exactly.
argument is that if the numbers do make sense, why wouldn't people take those opportunities? Now, on the last episode of the podcast, we talked about how they're building more rental units, right? Like there's going to be larger scale, there's going to be owners that own multiple units, like maybe it's developers, maybe it's a rental management company, whatever that might be. They're going to own larger scale numbers of units. Does that impact the future ability of people, like you just suggested, buying those condos and then being able to cash flow? It might, right? Like there may not be that same opportunity. That might be an impact, but I think at the end of the day, your argument still stands. If the numbers make sense, people are going to make those choices. So we'll wait and see. Big one that's coming up here, and I'm gonna leave things on this. Foreign buyer ban is expected to end at the end of this year, actually the start of next year, technically.
Yeah. So
That's
basically
a big one.
the ban basically is until the end of 2026 or early 27, I
I
believe.
think it's Jan 1, 2027. So it's basically the
Yeah.
end of 2026.
So with that, basically they would need to extend that
Yeah, or
for
modify it or put in something else.
yeah, or it just expires, and in
Yeah.
theory, foreign capital could come in to purchase homes here.
And that's only at a national level though. So there's still provincial restrictions in certain provinces that need to be noted as well. But obviously the national ban is going or could have a significant impact, assuming that it falls off in terms of foreign investment. We'll see, but yeah, I'm curious about that one for sure.
Yeah, so that's interesting. That's something to watch.
Well, I'm sure we'll talk more about it as we get closer to it. I'm sure we'll. I would be shocked if we don't get any news about it. If they just go, we're not going to say anything and just let it expire, that would be very surprising to me. I feel like there will be something that comes out about that.
Yeah. Well, yeah, that'll be interesting. I don't know how much of that there really was prior to the ban either, if I can be
It's fair.
honest.
Yeah. How much of an impact did it actually have? Right. Yeah, I don't know. We're not going to talk about this today, but it's one of those things where you hear it and you go, oh, okay, that's going to stop a lot of foreign investment. But is it? I don't know. Like how much of that is actually impacted by having that in place?
Yeah, well, and it also depends like what that inventory would be used for. Like Vancouver's a great place, but do I see hypothetically, would I see somebody purchasing a condo or something here to have as like a vacation property? I feel like I don't know if that's necessarily. I mean, I'm sure it is a thing here for some people, but it's much different than as an example, a lot of people from here will go to Mexico or go down to the States and they'll have a
Yeah.
warm weather warm weather, basically secondary home that they can vacation at. And obviously here there's the empty homes tax as well. And with the way our tenancy laws work, you can't really in theory just rent something out for 6 months so that it's available for the 6 months that you might want to come here. So yeah, that's interesting. We'll talk about empty homes tax and all that on another episode. We don't have time to break that down now. So yeah, as always, guys, if you found this podcast useful, you learned something, please always share it with a friend or family member. That's all we ask. If you are listening but not subscribed, we're offended. Please make sure to do that. That way you get notified as soon as we drop an episode, and leave us a 5-star review as well. We do appreciate that. But signing off, I'm Austin.
Cole.
And another episode of the Full Subjects Podcast.